Welcome to the Interest Rate Derivatives Related Economic Capital Management System for Commercial Banks, IRDEC. The following shows you how the system solves risk management problems dynamically. We enter the account number and password to log in. When either the account or the password is invalid, we cannot enter the system. This is based on user permission settings. Now what we see is the welcome interface, which provides us a group of recently updated news. We can add or delete the news in the user management. On the left, there is a list of your account information and some shortcuts. We can quickly enter the data management interface by clicking the shortcuts. Next, we provide you a general display of the various basic modules of the system, mainly including the capital calculation, stress testing, early warning management, data management, and help options. Firstly, let's look at the core of the system, the risk management part, including capital calculation, stress testing, and early warning management. Capital calculation can help us to calculate a variety of IRD risk indicators, such as VAR and CVAR. Stress testing can be used to calculate the potential losses under extreme cases, while the early warning management inspects risks based on the different values of impact factors. Before making the capital calculation, we need to edit the data you want to deal with in data management. Data management is the key to human-computer interaction. It provides the data used to calculate for all the other parts. When entering the DM interface, we will see three basic types of interest rate derivatives, including interest rate swaps, IRS, interest rate options, IRO, and interest rate futures, IRF. Here are two windows, the Add window and Query window. New interest rate swaps can be added through the Add window. Through the Query window, we can view the previous interest rate swaps. Take the 10-year interest rate swap as an example. Select Data Query window, and then we can see the details of data, including entry time, the name of the notional amounts, the floating rate, and the fixed interest rate. Among them, the notional amounts are the corresponding amount of underlying assets. The default notional principal of the system is 1,000 million. We can make changes as needed. Select the Add window, where we can change the notional principal. For example, we change it to 1 million. And we can also insert a floating rate, such as 0.05, and a fixed interest rate, such as 0.06. Okay, let's return to the query page, and the data has been imported. These data can be updated in real time. The updated data presented in the following functional modules will be used to calculate the various risk indicators. The system provides a user interactive platform. Similarly, we can import data to other derivatives. Based on these data, we can do capital calculation. After entering the capital calculation interface, we can see 5 submenus, including interest rate swaps, interest rate futures, interest rate options, asset portfolio, and optimal allocation. We can select different types of interest rate derivatives to do the measurement of economic indicators as needed. Take the 10-year interest rate swaps as an example. Click OK. We can get a series of economic indicators, such as VAR, which is calculated by the updated data in the previous data management part. VAR is the maximum potential losses under a certain probability of certain assets. CVAR is the average of losses beyond VAR. EC is the economic capital, while RORAC is a risk-adjusted return on capital. According to the results obtained, we can draw the marginal distribution of return on assets. The operations of interest rate futures and interest rate options are the same as the operations of interest rate swap. With these three kinds of interest rate derivatives, We can also get the economic indicators of their portfolio. Click on the Portfolios in the submenu. We can select 3 kinds of products as needed to get VAR, CVAR, EC, and REROC values of the portfolios. We take 10-year interest rate swaps, 10-year interest rate futures, and 10-year interest rate options as an example. By calculation, we get a series of economic indicators of this asset combination. In the asset portfolios, we often consider the optimal allocation problem, which can make the largest expected return of the portfolios in a given case. Here is a way. The amounts of economic capital can be input by the user. Here we limit the economic capital of 1 million as a demonstration. The system calculates the allocation of each asset. That is, under this allocation, we can maximize the expected return of the portfolios. Next, let's come to the stress testing part. The main function of this part is to put the bank in an extreme condition and predict the related losses of the extreme conditions. The conditions can be given through 2 ways: expert forecasting as well as historical forecasting. They will be discussed later on. First, click on the Stress Testing button in the menu of Data Management, through which we could update the latest data and information. The model could calculate corresponding results when the data are updated. Then we come to the functional part of stress testing. Click on the Stress Testing button in the title bar. This section consists of 2 parts: historical forecast and expert forecast. Click on Expert Forecast. The top of the main page will provide you with current benchmark indices such as VAR, CVAR, EC, EVA, REROC. When the data in the database is modified, the benchmark indices will change accordingly. The bottom of the page is a table. The client needs to input the stock index, interest rate, as well as the oil index in it. After inputting the indices, click on Confirm. The system could calculate potential impact on VAR, CVAR, EC, EVA, REROC, as well as the potential losses and the possibility of extreme conditions. Here we give out a group of data and calculate the potential losses as well as the possibility of extreme conditions. Historical forecast is to calculate the related indices in a historical context. Click on the Historical Forecast. The top of the page will offer the current benchmark indices. The client could choose corresponding historical events at the bottom of the page. The system totally provides us 6 events, which are the big shocks in history. Here we take the 9/11 terrorist attack as an example, calculate the potential losses, and the possibility if the 9/11 terrorist attack appears again. In the historical forecast, the stock index, interest rate, as well as the oil index are all secured through historical data. The client needs not to input them. Next, let's come to the early warning system. The basic principle of the early warning system is to forecast the possibility of bankruptcy by making use of logit regression models. There are 7 independent variables in this model. They are as follows. We could secure the 7 regression parameters according to the historical data. Stepping into the page of historical data, there are 3 windows: window for inquiry, window for add, as well as window for delete. Click on the inquiry window. The system could offer details of analysis as well as quarterly data for the above-mentioned 7 indices. These data are presented in percentage. They are liquidity, government bond, capital adequacy ratio, non-performing loan rate, as well as the percentage of the derivatives. Standard derivation, T value, as well as F value are all statistics. The coefficients of the parameters determine their impact on the stability of the bank. For example, if the coefficient of the non-performing rate is large, it means that the non-performing rate is an influential factor to the stability of the bank. From the significance of T and F statistics, the model has an excellent fit. The bottom of the page has a figure of the results. The red, yellow, as well as blue bars respectively represent coefficients, standard deviation, as well as T statistics. With these data, we could forecast the possibility of bankruptcy. First, we input a group of numbers, press confirm. The possibility of bankruptcy is 0.07. The Z-score value, which is a corresponding statistic of the possibility of bankruptcy, is 2.57657. The results show that the bank are now operating in a safe zone. We divide the Z-score value into 3 intervals: safe zone, gray zone, as well as crash zone. Then we try another group of data, which is an extreme condition. Press confirm. We find the possibility of bankruptcy is 99.9%. The Z-score is negative 8.0842. The bank is now operating in a crash zone. The early warning system could give a timely warning towards the potential threat and risk. We can see from above the module as well as its function of the economic capital management. In general, value of VAR and CVAR play a significant role in the researching of the risk situation of a bank. Stress testing is a supplement to capital calculation in the extreme cases. It is early warning management that provides prevention and warning of the danger which may arise from the stress testing. Then an integral risk management system, which consists of 3 realms of risk management, including identification, measuring, and monitoring, come into being in the light of capital calculation, stress testing, and early warning management. Up to now, apart from the key function of the system has been demonstrated, we are able to delete, modify, or add user information through user management of data administration. Clicking on news management, we may, in the same way, delete or report news. Additional functions are also offered in this system, providing for user convenience. As an illustration, we can check our emails by clicking Inbox and send inner emails directly by the mailbox function. In order to perfect our interface and make it look more friendly, detailed description of operating methods of this system will be offered by clicking User Help, and quitting the system will be safe by clicking on the Logout. That is all of the economic capital management system of interest rate derivatives of the commercial bank from Wuhan University.